Hello everyone, welcome back. In this video, we will continue with the chapter 13. So we are in accounting 312. In this video, we will continue with the chapter 13, and then we will talk about the second part of this chapter, so we can finish it. Last time we talked about the first part, which is the background, and then we also talked about the first approach, our market-based approach. So I'm not going to read the slides one more time. A general idea. Chapter 13 focusing on one thing, which is pricing. How do you find the price for your product? Make sure you know all the concept in the slide, and then read textbook if you have any time. The main thing for this chapter is we think about all the costs, right? We take all the costs, and then we also want to earn some money as the profit. Thinking about a market-based approach, you do this when the market is very competitive. The market already decided the price for you. You cannot really control the selling price, and you have requirement for your profit. So all you can do is to control the cost, right? All you can do is control the cost. So we say, hey, I want to sell this pen. Market said you can only sell at $10. And then I want my profit to be 20%, which is $2. So all I can do is I control my cost to be within $8. So let's say if now my current cost is $9, then I have to do value engineering to decrease my cost and also still keep my the quality. In order to do that value engineering, you have to separate value added and non-value added. You also need to separate cost incurrence and then locked in cost. So make sure you read textbook a little bit, practice, as I say, practice the multiple choice from the handout, and then also practice more, more practice in the Blackboard. So today we talk about the second part, which is cost plus approach, cost-based pricing. So this one is straightforward cost plus. We do it when the market is not competitive. So all you need to do is you have the cost and then you also have the plus. Let's say, hey, I said the cost of this pen is $10, and then I want the profit to be $2. The profit is also called as markup, also called as plus. So my selling price will be $12. That is my cost plus pricing. Okay, so straightforward, right? You just get your cost, you get your plus, which is also called markup, which is also your profit. You add them to that will be your selling price. You only do this, as I say, when the market is not competitive, so you can cover your cost and then also get your profit. Okay, so what else? I don't really have much to say here, so let's go to just get numbers down, and then we talk about what you will be tested, generally speaking. Cost plus price, pricing, you have to find out the markup. You have to find the markup. The markup is also called as profit, as also called as plus. Okay, so look at this question. I'm not going to read here. You read this by yourself. So we based the percentage using the total assets. So in this chapter, we based a profit percentage, the return, also called as return. Okay, we want the return is based on total assets, long-term plus your current assets. You use 12% markup as based on the full cost to get your selling price. Okay, so here is what I want to say. You have your full cost, and then you also want to add 12%. You also want to add 12% as the selling price. So your markup is 12% of your full cost. The cost plus is your cost is 720,000. Your markup is 12% of your cost. So you got your selling price to be this $806.4. Okay, so your full cost plus your markup percentage. How do you get the markup percentage? Markup percentage is basically is your markup, which is your profit, which is your return, which is your plus, divided by your cost. Okay, divided by your cost, not divided by your selling price. Markup divided by your cost is your markup percentage, is your markup percentage. So your markup will also be your cost times your markup percentage, gives you the dollar amount. You will say, how do I get this markup? Your next question is, how do I know my markup is $86.4? It's not $100, it's not $50. Why it has to be $86.4? How do we get this markup? Next question is, how do we get this markup? How do we get this markup? So your markup is decided by your return, by your investment return. Your markup is divided by your investment time the return. Okay, what's the meaning? You invested 96 million at the beginning of the year, and you want your return of your investment is 18%. So you invested 96 million, you want to get 18% as your return. So your return has to be 17 million to 80,000. And then totally you have 200,000 units. So each one, the markup, the return, the plus, the profit has to be $86.4. This is definitely the key part in this concept. What I want to say, I want to point out one more time. You will have 2%. You will have 2%. The first percentage is called the markup percentage. Markup percentage is 12%. How do you get your markup percentage? Is your markup divided by your cost. You also have another percentage, which is called this 18%. Your 18% is your investment return. Your 18% is your investment return. This 18% is completely different from your markup percentage. Your investment return is based on, your policy is on your strategy. You invested 100 million, you want your return to be 10%, so your return will be 10 million. So markup percentage is different from your investment return. You use your investment return, okay? So I write it down. Your first step is you use your investment return to get your markup. To get your markup, you invested 96 million, your return is 18%. You get your total profit, the total return has to be 17.28 million over 200,000 units. So each one, your markup has to be $86.4. You use that one to get your markup percentage. So your markup percentage is your markup divided by your cost. It's divided by your cost. Or your cost plus your markup will be your selling price, Okay, so kind of that definitely the important thing. If I ask you, hey, investment return is the same as markup percentage. Wrong. Okay, make sure they are two different things. We practice one if we have time, and then if we don't have time, I'll let you practice by yourself. I definitely give you my notes and I'll make a video to practice some important multiple choice with you. Don't worry too much. Next thing, what I want to say is for the cost plus, when we talk about cost, okay, some students will say, does cost really has every time has to be the full cost? That's really definitely a good question. In the reality, you can use whatever cost you want to do. You can use the variable cost, you can use fixed cost, you can use your manufacturing cost, you can use your period cost, whatever cost. Actually, the decision, remember we talk about manager accounting, definitely there is no black or white. As long as it works for your company, you can just go ahead with it. But the textbook said full cost is definitely a better way. But you can use other cost as the base, although full cost is recommended by textbook. What here we are trying to figure out here is that, so someone said, can I use a variable manufacturing cost? Yeah, go ahead. Variable cost of a product, you can also use manufacturing cost, or you can use a full cost. There is no right or wrong. It's just textbook recommended us to use the full cost because of many reasons, because it allows for profitability, it covers all the cost, it's easier. But if we look at this table, if there are four costs that we can consider, so tell me which cost is the largest number. Definitely the full cost is the largest number, right? Which cost is the smallest number? Variable manufacturing cost is the smallest. So it has to be variable and it has to be manufacturing. And then this is the first column. If we look at the selling price, you can find out no matter which cost you are trying to use, your general selling price, they are kind of similar, right? They are around $800. So what I want to tell you is, this is important. If your cost base is large, okay, so if you use the full cost, let's say if you use a full cost, which is 720, your total selling price is around 800. So you just need to have a small plus. So your plus is just $86.4. But if your cost base is small, so let's say we use variable manufacturing cost, $475. If your cost base is small and you want to reach the similar selling price, what you need to do, you have to have a big plus. You have to have a big plus. So if you use the small cost base, your plus has to be big. Your plus, your markup percentage will also be large. If your cost base is large, your markup percentage will be small, and your markup or your plus will be also small. Does this make sense? I think it's just kind of so simple. I shouldn't even have wasted your time. Why I do this? Because there are some multiple choice, we will look at them together. But what I try to say, if cost is big, your plus will be small. If cost is small, your plus, your markup percentage will be large. Okay, so that's basically just the two things you need to know for about cost plus pricing. Know how do you get the numbers, and then know kind of you have different cost can be the base. But if base is big, plus is small. Base is small, plus is big. Okay. So I think I'm done. Let's go to, I do some question with you together, and then you practice some by yourself. I'm sorry, it's not really clear because I printed and then made a copy. Hopefully, if you do your practice by yourself, you can have a clearer version. So let's look at this one. You have full cost variable, total, non-manufacturing to attain a price of X. So that means your selling price is kind of fixed, 800, 700, let's say. The markup percentage will be highest, okay? Markup will be large if we use the small cost as the base, right? Will be highest if we use which cost is smallest? Variable manufacturing. So if we use manufacturing variable cost as the base, our markup will be highest. So the answer will be variable manufacturing cost. As I keep saying, we practice here, but in the exam, I can do just the opposite. I say
if we use word cost base, our markup percentage will be smallest. Then the answer will be full cost. If we use full cost as the base, our markup percentage will be the smallest. Does this make sense? Does this make sense? Okay, so I will email you your assignment, and then let me know if you have any question. Okay, thank you. I see you next video. Bye bye.